Hey everybody, my name is James Shepard, and this week I want to talk to you about interchange optimization made easy. This has to be one of the least understood concepts in our industry among sales professionals, and unfortunately, a video is not going to do it justice. I'm going to give you just broad strokes here, but I really encourage you to click the link in this post to download the Merchant Sales Insight, or just head over to ccsalespro.com/insights, and it should be right there called Interchange Optimization Made Easy. Download the PDF and actually read this one, or even better, if you're driving, you can actually go to that same location, and you'll see a link you can click to listen to it on the podcast, or download the podcast app from iTunes or Stitcher. So anyway, this is a very complicated topic, but I'm going to dive in and give you a little bit of information here, kind of by way of introduction, all right? So what is interchange optimization? Well, first we have to dispel a major myth that salespeople in our industry have, especially when you're dealing with larger or B2B accounts. We have this idea that when we see the interchange table, that we have to take that at face value, right? So we see the processing fee, so the merchant's doing $100,000 a month in volume. They have an interchange table that says, $1,700 in interchange. And if we're not careful, we're going to look at that $1,700 and say, well, I can't do anything about that. That's the interchange. That's the pass-through cost. It is what it is, right? Wrong. It's not what it is, okay? You can change that. Now, why is this important? Because what most of us do on a big account, they do $100,000 in volume, and we see the $1,700 in interchange, and then we see $300-$400 in processing fees. So we focus on that $300 or $400 and say, well, how can I change that to save them some money? The problem is if you save them money by going after the processing fees, you're a processor too. So all of a sudden you just killed your own profitability on the account. Look at the $1,700 first, because if you can save them money there, help them achieve lower interchange rates, you can keep their pricing the same and still save them money by lowering the interchange. So all of a sudden your proposed interchange is going to be lower than the current interchange. How is this possible? This is possible with something called interchange optimization, and it's one of our specialties over at ISOAMP, which is the official sponsor this week of the Merchant Sales Insight. What is ISOAMP? ISOAMP is the leader in full service statement analysis. What does this mean? It means that companies outsource statement analysis, the entire process, they outsource it to us, okay? We have W-2 statement analysts here in the building, and others that are not in the building. We have a team of W-2 salary-paid professionals that are trained experts on statement analysis. Now, the idea is we leverage automation, which I'm going to talk more about in a second, but when we have to do data entry, when things have to be categorized, when the optimization doesn't seem quite right, well, it gets flagged, it goes to an analyst, and they, at no extra cost at all to our clients, they take care of everything and make sure it's all done right. So if you're tired of messing with statement analysis and you want it to be done right, and you want interchange optimization done automatically, reach out to getisoamp.com. All right, so quickly, interchange optimization, how does it work? You need to understand interchange rules, all right? I do not have time in this video to dive into that, but what I will explain is that these rules have a cascading effect. What that means is that if I take my card to a business and I swipe my card, there are certain rules that dictate the lowest possible rate that I could get on this transaction, or I should say the lowest possible rate the merchant could get on that transaction, right? So the idea is Visa, let's say it's a Visa card, Visa is going to say, okay, does this qualify as a level 3 transaction? Nope. Okay, does it qualify as level 2? Nope. Okay. Does it qualify as CPS retail? Nope. And on down the list it goes all the way to a downgrade, which is the highest rate, EIRF or a standard downgrade. They can go up as high as 2.95%. So the merchant pays all this extra money, not because they have to, but because that is the best rate they can get based on the data that was submitted with the transaction. However, using companies like Paytrace, who I also worked with on this edition. I actually wrote this ebook with Eric Jenks from Paytrace about 3 years ago, and we updated it, revised it. Working with a company like Paytrace, they can automatically supply the data needed to get a transaction qualified for the lowest possible interchange rate. So you say, okay, James, that sounds interesting. And again, I would highly advise you listen to the audiobook version or read the ebook version to understand it in more depth. But you say, that's cool, but that's way too complicated for me. I'm a salesperson. How am I going to figure this all out? You don't have to. Go to getisoamp.com, sign up for an account, just drag and drop your statement in there. And if your statement has an interchange table on it, our system is going to match up every interchange category with the correct interchange cost. Now, that's going to do two things. Not only is that going to allow you to run optimization and show the merchant a side-by-side, line-by-line, automatically generated proposal template that's going to say, you're currently paying this on this, and we could get it to this interchange category using PayTrace or using another provider. But in addition to that, you're also going to automatically, we're going to recognize the padding for you. How many times does an interchange table have padding? Oh my goodness, it's unbelievable how many times we see it on statements. You look at the interchange table and say, yep, that's an interchange table, $1,700. No. It's actually only $1,500. Why? Because the processor is marking it up 20 basis points. And every interchange category actually is 20 basis points higher than the true cost. We see it all the time. Our system automatically recognizes that. So we have the padding. Then even once we identify, well, this is the true cost, but we can even get the true cost lower by helping them qualify for lower cost categories using solutions like PayTrace and other gateways to automatically supply data to get them lower transaction amounts. Okay? So interchange optimization is a fascinating topic. If you're not going after B2B accounts, you're missing out. If you're not leveraging interchange optimization, you're missing out. You say, well, James, I don't need interchange optimization. I sell big accounts, but I sell them all on cash discounting. Oh, okay. So you don't care about residual. Oh, wait a second. If you lower your cost by 30 basis points and they're on cash discounting and they're paying 3.5%, 4%, who gets that 30 basis points? You do, okay? Optimize the interchange always, whether they're on flat rate, cash discount, interchange plus. When you can optimize the interchange, especially on a larger merchant that's doing business-to-business transactions, the odds of you achieving significant savings through interchange optimization are high. Now, that's all I got time to cover today in this video. But again, definitely click the link or go to ccsalespro.com/insights. Click on the most recent one. Listen to I do the audiobook version. The audio version is not like this video, the audio. It is I think 35-minute audiobook on interchange optimization. So definitely check that out or download the ebook version and read that as well. My name is James Shepard. Thank you so much for taking time to watch this video and for supporting the Merchant Sales Insight.